cuts are getting pushed out into really 2025. At least that's the consensus view by the markets in the moment. Not everyone shares that view, though. Let's bring in a contrarian, if we will. Chris Turner, global head of markets over at ING, joins us this morning. You don't think that the Fed is going to wait till 2025 for that cut? Explain.
Yeah, no, we've got at ING, we've got 3 cuts from the Fed starting in kind of September. And we think there are signs that the hard sector data does catch up with the survey data, and that the Fed will be in a position through the disinflation to cut 3 times later this year. So it's not going to happen kind of this quarter, and I think market sentiment stays pretty strong for the US during kind of this quarter. But I think in Q3 we expect the environment to turn, and where the market's pricing today, the market's only pricing 1.5 Fed rate cuts for the moment. So we think that pricing will probably start to shift, favouring more rate cuts probably in the third quarter.
So that's the monetary policy piece of the equation. The U.S. is very resilient. It's not a secret. The rest of the world, not so much when you look at the fundamentals. What is driving this dollar move? Is it the monetary policy or is it capital flows?
I think it's a bit of everything, basically. So you've got,
Come on, Chris.
Yeah, okay, sure. High yields, high liquidity, the geopolitical risk kind of picking up, and US energy independence. So if you do see this energy shock coming out of the States, for example, any stress on the Straits of Hormuz and gas prices and oil prices surge higher, I think that will just send the dollar even higher. So, you talk about how is the market kind of positioning for geopolitics. And I think, if you sit in the dollar, very high yielding, 5.25% like deposit rates, it's not a bad place to sit, given the risks that we face at the moment.
To be clear, on the central banks then, you're pushing back on the narrative that formed by the end of last week. Then actually there's real divergence going on between the likes of the Fed and the ECB. Do you push back on that with your expectation that there are actually 3 cuts coming through from the Fed? And what does that mean for euro dollar?
Yeah, we think there's probably going to be more story for Q3. I think in Q2, I think divergence, as you say, will be the hot story. It's very kind of clear the ECB is saying we've got a different kind of inflation in the Eurozone. We've had a supply shock, so we don't have the same demand-driven inflation that they do in the States. We've got room to cut. We're prepared to be independent. So I think that story might last for the next couple of months or so. Eurodollar could, which is now close to 107 today, could go to 105. But I think one of the reasons why those people who are calling for parity, we're not in the parity camp, and we don't think it's going to stay down at parity, is the situation is far different from late 22 when we had much higher energy prices. The Eurozone current account deficit back then was minus 30 billion. It was a 30 billion deficit per month. Now you're looking at 30 billion surpluses. So this sort of brief period of like dollar strength or euro weakness just on the rate differential, I don't think it's a good quality story to kind of back for the rest of the year anyway. So we're looking for sort of temporary dollar strength just into Q3 and then that turning around.
Okay, 105 on euro dollar. What do you do with the pound?
The pound, I think it's interesting at the moment. Last week, you saw the market pricing 45 basis points for easing, both from the Bank of England and the Fed this year. I think that divergence will come through where the market prices the Bank of England more like the ECB than they do like the Fed. And we had some really interesting comments from Dave Ramsden on Friday, one of the insiders, saying actually things are heading in the right direction. Disinflation is coming. There may be some signals, you never know, at the May meeting about a June rate cut. We're actually going for August, but we think there are risks they go in June. So I think greater pricing for Bank of England can see cable under pressure and sterling underperforming the euro.
I look at the options market, I look at the yen, and oh my Lord, is that a big position? It looks really stretched at the moment. Does it get more stretched? And when it snaps, what happens?
Yeah, so we're up at a big level in dollar yen near kind of 155. And we're talking about with our traders last week, if you do, for example, this Friday, you have a core PCE at 0.4, another really sort of strong US piece of price data. Dollar yen surges through 155. Can the Bank of Japan really say, we've got a problem with this? It's a sort of macro-driven move. But I think last week, and I wanted to kind of talk about this, we had this a trilateral meeting of finance ministers in Korea, Japan and the US. There was a joint press release, and the Japanese and Koreans said we've got serious concerns about the sharp depreciation on our currencies. So I think that does actually raise the risk that if the dollar does surge and we see some disorderly moves in dollar yen and dollar Korea above 155 and 1400 respectively, that you actually could see some coordinated intervention between Japan and Korea.
I think it was Connolly that said it's our currency and it's your problem back in 1971. Yeah. There's an echo coming, it seems, certainly right now. How successful would intervention be? Are the conditions right for intervention? You need to make sure the market is all one way. You need to deliver a surprise. Is that surprise in place? could a surprise actually come in terms of the hawkishness of the BOJ and the message that it delivers as well? How does this play out? Is the risk intervention? Is the risk hawkishness? And are the markets? Does market positioning kind of lean one way or the other in terms of which one would be more effective?
Yeah, I think for a sustainable turn in the dollar, you've really got to see the US macro story changing.
Okay.
I think some modest increases. We actually do think the Bank of Japan can hike twice, I think July and October. But as we saw after the last kind of Bank of Japan hike, the fact that the spreads are so wide that some modest 25 basis point narrowing policy spread and actually JGB Treasury spreads have continued to widen. Any turn in dollar yen won't be driven by the Bank of Japan. It will have to be the US. So I think probably the Japanese will hope they can inject a bit of uncertainty. You know, if you were thinking about selling the yen or the Korean won, you know, you may want to think twice if those guys were going to come in and sell a lot of dollars and you don't quite know where. But really the big turn will only be when the macro story shifts. And importantly, if you remember last November and December, when the dollar turned on the sort of Fed easing story, actually it was the yen that outperformed, and it's the yen that is the most undervalued currency in the G10. So I think when the market does decide that the dollar has turned, actually the yen will be quite a popular currency to trade that story.
So if everything seems to be a function of the dollar at the end of the day, where does election risk fall into this? Where does deficit risk fall into all of this?
Yeah, I think deficit risk, if you look at the FX markets over the last kind of decade, there have been very rare occasions where, you know, treasuries and the dollar have sold off kind of hand in hand. So, and there have been occasionally sort of poor auctions, large tails, and, you know, maybe sort of a 12-hour or 3-hour move in the dollar that gets quickly kind of reversed. So maybe that will be a story for, you know, next year once we know kind of who's in the White House. But I think at the moment investors I think they're not making up their minds about this. You see in the options market, there are kinks in the options curves. They expect more volatility after November, but positioning for that now, I think it's too early. And I think, you know, probably it will only be after the Labor Day holiday when we start looking at the polls. And I think the consensus will be Donald Trump would see a stronger dollar and Biden a softer dollar.
Okay, we'll wait. See how that positioning unfolds. Chris, lovely to see you this morning. Thank you for stopping by to see us. Chris Turner, Global Head of Markets at ING. Coming up, we're going to take a look at which stocks you want to be watching into the open, including UK music investor Hypnosis, after the private equity firm Blackstone made a new proposal to buy the company. We're going to keep an eye on what is happening there. Big week for earnings coming up. SAP is going to report a little bit later today. This is Bloomberg.